All right. Thank you, everyone, for attending this month's market update webinar for the month of May 2026. Let's get started with disclosures. Silverstone Financial LLC is a registered investment advisor. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Please be sure to first consult with a qualified financial advisor and/or tax professional before implementing anything discussed within the presentation. And of course, past performance is not a guarantee of future results. You can see our website for additional disclosures. And throughout the webinar, please feel free to use the Q&A button at the bottom. We will address them at the end. So about us, Silverstone Financial, the firm, is a fee-only fiduciary independent wealth management firm. We provide financial planning, investment management, tax preparation, estate planning services, and so on. My name is Jeremy Eppley. I'm a CFA and CFP, financial planner that specializes in inheritance, optimization, and gift and estate planning. My partner and co-host is Gordon Achtermann. He's also a CFP, a financial planner. He specializes in retirement planning and value-aligned investing. Let's get into what happened in the markets this past month. So April was quite a month. There was a lot going on in the markets, but also a lot going on in news stories that we're going to be covering later on in the presentation. So it's going to be have a lot to talk about. But for to start out, just the markets. This is a heat map. We like to show this each month. This is how I look at the markets each month. The larger the box that you see, the larger the company. The greener the box, the higher the returns were for this month. The redder the box, the worse the returns were for this past month. And they're divided into various sectors and industries and such. You see technology up here, nice big green. We see healthcare down. We see energy, so oil, gas and oil and such, slightly down. Gold fell quite a bit. And we see some of the biggest winners being Google and Amazon here, up almost 30% for the month, which is quite impressive. On the right over here, we have our indices. So the first top one here is the S&P top 50, so the 50 largest companies in the S&P 500. They were up 11.6% for the month, mostly dragged up by Amazon and Google. The S&P 500 as a whole returned about 10.5%. Small caps returned about 10.4%. So you can see that small caps did worse than some of the largest companies. And then S&P GARP, which is one of our preferred ways of investing, that is a subset of 75 companies in the S&P 500 that are more growth at a reasonable price, is what GARP stands for. So it's a more, I guess we'll call it, disciplined way of investing instead of buying some of the most expensive stocks that have some of the highest returns. Google is included in that GARP index, I believe. So I did contribute to some of the returns, but some of the other gas and oil companies that are included in the index, I think, dragged down on the performance a little bit. Global ex-US, those are non-US companies, foreign companies, up worse than the US markets, up 9.7%, but still quite a month regardless. Aggregate bonds, mostly flat, as you would usually expect, up 0.23% for a total return, including dividends, interest, and such. Gold down slightly, 1%, but the gold stocks seem to be down more than that 1%. So some people like to hold gold stocks as a proxy for gold, and you can see sometimes it doesn't translate one-to-one. Crude oil up 3%. It went up and down way more than 3% over the past month, mostly because of the war in Iran. But it settled for month to date up 3%. And then Bitcoin up 13% or 12.6. We saw a little bit of a flight away from the US dollar to Bitcoin, I suppose. Also, just it tracks with some of the large tech stocks sometimes when it goes risk on, as we call it. Bitcoin gets more attractive. Uh, Before I switch to the next screen, Gordon, do you have anything to point out here?
Well, I love that the US is catching up to the rest of the world this month. Still, some of the indexes are a little behind year to date, but April is a good trend for US for sure.
All right. We'll quickly show the year to date. So a lot of the returns were in the past month. The January started off fine, and then February and March we saw quite a big drawback, mostly because of the conflict in Iran and the various fears around oil and inflation that came with it. We see now that this is 4 months of data. It's January, February, March, and April. We can see that oil companies have done quite well because as crude oil prices go up, usually their profits go up as well. We saw also the semiconductors do quite well as the AI train and building the various data centers continues to chug along. Software being another section that is highlighted here, where you see that it fell quite a bit. And this comes from a lot of the fears around AI replacing some of these SaaS models, software as a service models. The fear of like Adobe as well. Are you going to pay for Photoshop if you can just go to Claude Code and tell them, "Hey, whip me up a Photoshop software"? Like I think it's a little bit overblown with some of the fears there, but that is where that's coming from in the markets. And then yeah, we see some of these healthcare stocks down a little bit, and some of these other communication services. We see some bright red. Uh, Crude oil up 83% year to date. That's a big number I want to point out there. So that's you can see that with the energy, and that comes with the war and might trickle into various inflationary problems. And then yeah, everything else seems somewhat normal, other than these small caps have outperformed year to date. Compared to the largest companies. Even though Google and Amazon have done well, Microsoft and Tesla and Apple and Nvidia have dragged on performance on the top 15 comparison. I guess Nvidia helped a little bit technically, but not by much. Anything to add?
Well, I always like to also mention, well, because it's an outlier, emerging markets. Um, One of the indexes, the iShares follows, is up a little over 19% year to date. So some interesting stuff going on with South Korea. Um, and they have a second company, I believe, that's that's reached the $1 trillion level of market capitalization. Um, that's outside the US. So just some interesting things going on in emerging markets also.
Yeah, great. So now that we're a few months in, I am bringing back this graph. We had paused it for a few months because it was just showing me January, February. It's kind of a boring graph when you only have 2 months of data or so. But this I very much love this graph. Shows the average monthly S&P 500 returns by month historically. So this outside circle over here is the historical returns from 1950 to 2017. So it's missing out on the last decade or so of data, but still shows that the seasonality and the cyclicality of the markets quite well, with September often being the worst month and December being the best month in the markets. And 2026 actual numbers are in this inner circle here. So we saw January performing somewhat normally, and then February and March are usually flatter up, and we saw that they fell for those months. And in April, up 1.5%, usually a very good month. Is you're getting earnings reports that are coming through, and we saw a huge jump up here at 10.5% in a single month. Year to date, because we had some losses in February and March, year to date is 5.5%. So very interesting to see. May and June are often harder months. The second half of the year until the end of the year often is a little bit weaker. So we'll see if the market is strong enough to push past all that, or if we're going to see a pullback, because we are at all-time highs again now, and it is quite a large jump in a single month. So I wouldn't be surprised if the next few months are softer. All right, getting into the S&P 500 chart. And there are some months I like to show it, and other months I don't. Last month I had brought this up, and I showed the how much tariffs had drawn down at the beginning of 2025 when Trump had taken office, and then we had quite a recovery, just up, straight up and to the right for quite a bit of time, and then around November we started hitting a ceiling. We also call it resistance in finance, where there aren't as many buyers at this about 7,000 level, where we get near 7,000, then it would sell off, and it would slowly get back up to 7,000, and it would really struggle to break past that. And then at the beginning of 2026, so February and then March specifically, we saw war and the conflict in Iran causing oil prices to bring in fears in the markets. And then what we see right here is surprising. It is kind of right on the April 1st here, or I guess the day before April 1st, we saw quite a jump back up, and it surged past this resistance point, broke through, broke out, and now is at all-time highs. Really interesting to see the breakout. I've been kind of bearish for quite a bit of time with the where the markets are. They're expensive, and there's fears of like AI bubbles and such. But one of the reasons, there are a number that contribute to the markets, but one of the reasons I've been seeing for April is that the earnings, April is an earnings month, a lot of reports for what happened the past quarter or so, and the earnings are strong. We see Google had an incredible quarter. They're now the second largest company in the world, quickly closing in on Nvidia. And they jumped like 10% in a day after their earnings or something. And that's quite a big jump for a company that is worth multiple trillions of dollars. So very interesting to see that they broke out, and the market is expensive, and I keep thinking that. However, earnings keep going up, and if earnings keep going up, it's actually not that expensive. How markets are determined to be expensive or inexpensive is the price that you pay for a stock divided by how much earnings that company makes. And if that denominator grows, overall the price comes down. So I still have lots of fears in the market and worries specifically around AI overspend or other inflationary worries, or also the degrading of the U.S. position based off of some of the foreign policy choices of the administration. But it's kind of hard to argue with the market, with the earnings that you're seeing and the actual performance of the markets. Anything to add there, Gordon?
Yeah, I think that the initial war, nobody knows if it's going to be contained. And what's Russia going to do? What are these other kind of factors? Is China going to get their navy over there and try to make something happen? So the most extreme versions of the catastrophe of the war haven't played out. I mean, it's definitely a humanitarian disaster in Iran. But economically, we're kind of in this stalemate where both sides want to blockade and claim that as a victory, which is really weird. And so I think the market has just decided that, well, the worst that we were afraid of doesn't seem likely. So we're just going to kind of wait and see what happens with the inflation and um, potential inflationary pressures from higher oil costs and natural gas costs.
Yeah. All right. So let's get into the graph of the month, which Gordon has prepared for
Yeah.
us.
So the manufacturing prices index. So this is a survey when they talk to purchasing managers in manufacturing, and they ask them, "Are your inputs going up in price? Yes or no?" And if half of the people say yes and half say no, then that's considered kind of neutral on inflation. Well, this 84.6 is the highest we've seen since the big interest rate hikes of 2022. Um, and so that's mainly because of fuel. And boy, diesel fuel especially has gone up a lot. Um, it's hard to make diesel fuel with the type of oil that we have in the ground in this country. We get that heavier crude from Venezuela and from Iran, is also one of the biggest sources of the heavier crude that's better for making the really intense and energy intensive fuels like diesel and jet fuel. So the flip side of this coin, I don't have the graph here, but I can just say that for services, they do a similar one. And services are basically neutral. Services prices are not going up. So while we saw a big hike in the inputs to manufacturing, there are also those same inputs go into transportation. And so I think we'll see, uh, you know, that kind of trickle down into services a little more in the next month or two. Um, and we'll just have to hope that that the input prices don't continue to rise too much because, once inflation becomes an expectation, then it's harder to, um, excuse me, it's harder to undo it and slow it down. And so that's what the Fed is worried about, which is something that we'll be talking about a little later.
Yeah. So those are our graphs for the month. Let's get into the notable events. And there have been quite a few. This has actually been from finance news that I feel has gotten buried from a lot of the traditional news outlets. So it's been a gold mine, or maybe not a gold mine, but it's just there's been a lot to follow and a lot of impactful news that you might have missed out on. And very excited for this month. I guess I'll just leave it at that. So the first two I just want to mention is we've started to get more into making educational YouTube videos for our clients and such, and we did deeper dives into two news items that happened over the past month or two. The first one is here, and it's a Silverstone Financial on YouTube if you want to find it. Um, there was a verdict on the Ticketmaster Live Nation antitrust lawsuit, and so we dug into that in our video. And then the other one that just released, I think yesterday or the day before, was I don't know if you can hear the cars outside, so apologies if you can. Um, the one that just released yesterday or the day before was our Allbirds video. So for those that saw some headlines about Allbirds stock, which is a shoe company, their stock shot up 1,000% over a couple of days out of nowhere, and it has to do with them pivoting from shoes to AI. So it's quite an interesting video for any of you that are interested in learning more. Uh, all right, let's get into some topics that we haven't made YouTube videos about yet. So the first one is local news, since we have a lot of clients that are in Virginia and Maryland. This is a more so Maryland thing, but we'll see a lot of Virginian laws and Maryland laws. They overlap and they follow each other pretty closely. So I wouldn't be surprised if we see a similar law in Virginia soon enough. Maryland has become the first state in the union to ban dynamic pricing in grocery stores. So April 28th, so just a few days ago, Governor Wes Moore signed Protection from Predatory Pricing Act in Maryland. And so it's banning surveillance and dynamic pricing. And essentially, for those that don't know what dynamic pricing is it's saying, okay, it tracks you based off of, there might be cameras in the store, or it might just be based off of like your customer rewards number or your phone number that you input at checkout, or other kinds of ways that they're trying to track you, to price you differently based off of your means or your shopping habits. It's like, well, if it knows that you go in to get your Ben and Jerry's ice cream on Friday every single week, then why don't they ratchet up $1 just for you? That's the fear around dynamic pricing, with more surveillance and more cookies tracking your searches on Google, and AI and all the other kinds of fears around this big data, around your personal data, and it trickling down into your actual grocery store shopping. Instacart had some issues there where they had like a short-term test run to see if they could basically get away with it, and there was some pushback, and they have ended that program of trying to dynamic price on all of the grocery store stuff. We do see that, and this is, I believe, just for grocery stores, but we do see that with some companies trying to, like with fast food. I don't remember, so don't send me a cease and desist like McDonald's or anyone. I don't remember which fast foods, but there was like McDonald's or Burger King or KFC, one of those, maybe Taco Bell, where it was trying to, based off of how many other people were buying it. So like if you went at lunchtime, the prices would be more expensive, or if like you're outside of a concert hall or something like that, and then suddenly the AI realizes that the foot traffic is higher, then it ratchets up the prices. So anyway, there's fear of that, and so Maryland has now banned that practice. Though the penalty, which the law only applies to those who cannot pay the penalty, as some people say. The penalty is only $10,000. I'm not sure if it's $10,000 per instance or per customer. Hopefully it is. But if it really is $10,000, then that could just be a cost of doing business. So we'll see if how that shakes out over the years and what other states adopt this.
Yeah, I mean the enforcement is always the tricky thing, but I think we're gonna see more of a trend of that with pushback on the surveillance state coming at the state level, because people really I think in general don't like it.
Oh yeah. Yeah, and the enforcement thing that I'm thinking about is the classic speeding ticket or parking ticket. It's like, well, the law, parking, you can park anywhere as long as you're willing to pay $100 for a parking ticket. So if you're rich enough, it doesn't matter, right? So
Right.
hopefully that doesn't apply to the companies that may do this. We'll see. So some more Elon SpaceX news. There's been rumblings. This is the beginning of April, that SpaceX confidentially filed for an IPO with the SEC on April 1st. And I believe the rumors is that it's targeting a $1.75 trillion to $2 trillion valuation, trying to raise $75 billion. So that would be more than double Saudi Aramco's $29 billion offering, which was the largest IPO back in the day. So this would be a record. We've mentioned it in the past, in a past webinar episode, maybe I think 2025, sometime in the fall, where we had talked about OpenAI and SpaceX and Anthropic and these other, basically trillion-dollar companies, all IPOing potentially in 2026, and how simply the supply of shares. So a lot of people don't actually think of the stock market in supply and demand context, but legitimately the supply of company, just straight how much company equity is available across everything will go up significantly of public companies. So we'll have to see how, like, say, the S&P 500, like Vanguard's S&P 500 fund, they're going to have to sell holdings to buy the new holdings that are coming in, because there aren't that many IPOs that just IPO into the S&P 500 kind of. So like it will be interesting to see, and might have a drag on some of the rest of the holdings simply because these new large companies are coming in. We'll see what happens. We'll keep you updated. I'm sure there will be more news, and I'm sure I would not be surprised when the IPO does happen that Elon will officially become the world's first trillionaire, which is so exciting. Sarcasm. Okay. Anyway, so Tim Cook. Tim Cook is stepping down after 15 years at Apple. He's stepping down September 1st, and he'll be replaced by John Ternus. John Ternus, which is this other headshot over here. So this is Tim Cook and John. John Ternus was long time the head of engineering, hardware engineering specifically at Apple. So, you know, the iPads and MacBooks and phones and earbuds and such. He was the head of all those decisions. You know, he was reporting directly to Tim Cook as the CEO. Now, Tim, he's going to be staying on the board, and you know is still going to be working in the company, but will no longer be CEO. There is some speculation that they're trying to get younger executive team in because of the fears with how they're falling behind, quote unquote, with AI, where that potentially Tim Cook was a little bit more conservative in terms of his you know the speed or the risks that he was willing to take with the company. And there's some, you know, at least finance analysts saying that a new, younger, I think he's in his 50s, young 50s, John Ternus, will do some quote unquote riskier moves with the company that could pay off big if they're successful.
I don't know. I mean, Apple to me has always been a hardware company in that, you know, the phone, back in the day when the Macintosh first came out, they wouldn't license the software to other people, even though that was kind of the best thing about it. They were just like, we make it, we have our own exclusive software, and we're gonna do things that way. I don't know. I guess I hope that they stick with their hardware and design focus, because that's, to me, seems like what they do best. I guess it's inevitable that a company with that, with the growth aspirations that they have, you know, has to have an AI presence, but I don't know. I'm hoping that they don't pivot too hard that way.
We'll
Just
see
as
how
an
it goes.
investor.
You know, they have for a long time tried to diversify away from the hardware business, just from to a
Hmm.
subscription, you know, software as a service kind of, you know, you're on their app, their iCloud, and the health fitness tracking, and the Apple TV and all the other stuff, because recurring revenue is just more attractive. I'm happy with it. You know, bringing on an engineer at the head of the company. You know, he's an engineer by training. You know, is interesting to see. You know, he's what we'd call like a products guy. Steve Jobs was a products guy. He really cared about the phone, and that the phone was glass, not plastic, on the screen. Versus Tim Cook, his background is supply chain, so he's done a great job of making Apple run like a well-oiled machine. But there has been criticisms that, you know, some of the emphasis has been taken away with some of their design, and we'll see if that goes back under John. I'm just kind of happy. Nothing against Craig Federighi, he was another person that was in the running for him. He's the head of software engineering. So they picked the hardware engineering guy over the software engineering guy. I know Craig Federighi, he was very much one of the proponents of like locking down the ecosystem. A lot of the I like when there was lawsuits and other complaints about like iMessage and such, where the blue bubbles, green bubbles, and how it was affecting people in middle school and high school, and all the different kind of bullying that goes around with that. There were lots of emails that came out where he was very much of there's no reason to give any kind of compatibility with Android simply because that is a disadvantage to us. And so I hope that John will be more open to, making being nicer to the non-Apple customers. We'll say, I'm an Android user, and it's annoying when the only reason something doesn't work is because Apple doesn't want to have it work because it's a profit center, and so it's trying to put up walls. Either you're in the garden or you're out of the garden. It's a very high wall garden regardless. Uh,
Hmm.
Moving on. So I guess you're talking about the
Yes.
Maduro case, right?
Yeah. So this soldier who was arrested, got his name here, uh, Gannon Ken Van Dyke, um, charged with insider trading. Is the charge. He used classified information that he knew about the coming raid to capture Venezuelan President Nicolas Maduro. And he made $400,000 on Polymarket, that's the prediction market site. Um, he was a master sergeant with the Army Special Forces, or is, I guess, probably, if he's convicted of insider trading, I would assume that would be a dischargeable offense. Um, and so that really kind of like reminded me of a couple of other things that, have happened in the past. Similarly, there was the famous and less serious case of the Super Bowl streaker a few years ago. There was a guy who predicted that there would be a streaker at the Super Bowl and then went ahead and did it. And so made a lot of money. Um, and then there was another case, didn't get much headlines, but also interesting, where French authorities are investigating a suspicious temperature spike Charles de Gaulle Airport, which is the official place where they measure the temperature in the city. Um, Somebody predicted that the temperature there would hit 40 degrees centigrade. And so he knew where the heat sensor was and ran a hair dryer on the sensor until it registered a high enough temperature. Um, some kind of a heat gun, I guess. That's basically a hair dryer.
Yeah.
So, these things keep happening, and this other one was more serious due to the classified nature of it, but it's just really highlighting the dangers of these prediction markets and their relative lack of regulation. You wonder who else is doing insider trading that we don't know about. And the Senate in the US just passed a ban on senators or staff doing any trading on prediction markets. This is just a Senate rule, so whoever the next majority leader is could change it. It doesn't have the force of a law, but if someone breaks Senate rules like that, then they can be kicked out. They could lose their job, be censured. I don't think it has a mandatory punishment for a senator who breaks the rule, but certainly it could be punishable by different levels. Like they could lose uh, committee assignments that they like, could lose seniority status, things like that. That would be short of actually kicking them out of the body. But so interesting. I think while it's sad, it's good that it's bringing to people's attention that these prediction markets are really if you don't have insider information, you should ask yourself, is it possible I'm the product here, I'm the rube that somebody else knows? Uh, and if you're going to play on those, limit it to things where that aren't predictable by insiders. That would be my advice.
Yeah. Like this all these kinds of things go back to like when the mob was rigging boxing fights, and we're seeing this happen again where it's Polymarket and Kalshi, I think is the other one, and there are a few of these prediction market that Robinhood has their own now, and like I would highly recommend avoiding. You don't know what kind of these are only the ones that we had time to talk about. There are a lot that have hit the various um, news headlines. I'm sure there are many, many, many others that haven't because the bets were small enough or the manipulation wasn't seen. Like, I miss the days when the only people that were insider trading were the hedge funds and the senators. Like now it's everyone. So it's just avoid and be very careful. These things
Mhm.
can be manipulated, and there aren't very many good guardrails in place, at least not right now.
Yeah, I think it's just a matter of time before we have a major sports scandal around insider trading on these things with college basketball and football. One fumble can change many millions of dollars of um, and you don't even have to lose the game when people are betting on the spreads.
Yeah. There are spreads. There are, do they do this? Like, what kind of dance do they do? There are a whole, like, will Trump say X, Y, or Z within the next month?
Uh-huh.
And it's like, you know, when you can bet on anything, like you fear they're so easy to manipulate. You can find a manipulatable, bet. Regardless, we recommend to avoid. Uh, Moving on.
Yeah, so the Justice Department dropped the probe into Fed Chairman Jerome Powell. Um, well done, finally. There is no evidence of wrongdoing related to his financial transactions. I think it was also about the cost overruns on the refurbishing of the Depression era Federal Reserve building. So yeah, that thing was put together in FDR's first term, so early 1930s. So it was over 90 years old. Um, really needed to be upgraded, and but they went way over cost, and so I think that was the thing that initially raised some suspicions. So that was Powell had said he wouldn't step down unless the suit was resolved in some way. Um, and so that clears the way, at least for an orderly transition to the next person uh, who has not been approved. I don't believe they've had hearings, um, but I don't think they've had the vote on his confirmation by the Senate yet.
Yeah, there was Senator Tom Tillis, I think. I don't remember exactly, but one of the senators who's not for reelection, he's a Republican, so he's willing to actually, stand up to Trump a little bit. He said that he would veto whoever would come across until the Powell's criminal probe
Mhm.
would be closed down. And surprise, surprise, not that the proceedings have started for the next chair to be approved, which is still ongoing. Now, Powell's criminal probes have been released so that he can the new Kevin Warsh, the new chair nominee, can be approved by the Senate committee. So
Mhm. Yeah, that's right. Tillis is North Carolina's senator. He's declined to run for re-election. It's seen as very competitive. North Carolina's former governor, I think, is running on the Democratic side. So, um, interesting race there. The next one is the United Arab Emirates leaving OPEC and OPEC Plus. So, um, a lot of speculation about what may be driving that. It occurs to me that, Russia is the biggest member of OPEC Plus, and actually, I believe the biggest oil producer after the U.S. They produce more oil per day than Saudi Arabia, a little bit more. And since Iran has hit um, some of these UAE countries, then maybe that conflict had something to do with it. Maybe they were hoping to get Russia and Iran kicked out, and or um, and so they just decided, you know what, we don't need to be part of this, and sharing revenue and strategy with people who are, um, violently hostile in the region. Um, so whatever else, and whatever you may think of the U.S. Involvement in that area, um, it's a really big move. It's been an expanding group over the years, and this is the first really big player to leave. UAE, 2.9 um, million barrels per day, which is number four in OPEC. And if you include Russia, who's in OPEC plus, they would be the fifth biggest producer. So, big news, remains to be seen. What kind of, if they take a different line, but they definitely have more freedom now to set their supply rates without consulting with the other members who try to do things together as much as possible.
yeah, just some context that you touched on there at the end. For those that don't know what OPEC and OPEC Plus are, I know it's a cartel by definition. So when we think of cartels, we think of violent drug administer or organizations in Central and South America. But
Hmm.
a cartel by economic definition is a group of producers that limit or determine their supply, try to consolidate their supply so they have control over the markets. And so OPEC, the organization of petroleum exporting countries, and OPEC Plus is, the OPEC it's kind of like if you think of the EU, you have, a certain number, it's not, one to one, but you have countries that come together and they have similar economic policies. So you have these petroleum produce exporting countries, and then you tack on a few more as OPEC plus, so Russia and a few others that follow that. And so OPEC, the organization, determines how much they want to produce across the board, across all of them. So instead of it comes down to a classic economics theory about the tragedy of the commons, where everyone, the tragedy of the commons refers to a shared space, a shared field where all the farmers bring their sheep, and if one farm, like since it's shared resources, the farmer comes in with a sheep and the sheep eats all the grass, everyone else suffers. So the idea is everyone's going to act in their own self-interest, so you should get your sheep in first and eat as much as you can before everyone else is messed up. So OPEC
Mm.
is saying the opposite, where he's saying, okay, well, instead of, Saudi Arabia is going to come in with their sheep and pump as much oil as possible and try to get ahead of everyone else, and it doesn't really matter what it does to the oil prices. They're going to say, no, we're going to have 40 sheep come in on the field at a time and make sure we're not overproducing. Sheep and oil isn't 1-to-1. Hopefully, it didn't lose anyone with that analogy, but it's about controlling the supply and acting together so that one country isn't ruining everything. Now, of course, the U.S. is now the largest oil producer, and the U.S. does not is not part of OPEC or OPEC plus. So the U.S. has really screwed up OPEC's whole positioning. It was back in the 70s or 80s when there was the oil crisis, where OPEC cut off a whole lot of production, and there was a whole lot of problems with the U.S. Um, no longer, because OPEC is smaller than the U.S. Or actually, do you know if OPEC total production? I guess that'd be higher than the U.S.
It's higher. The US is a little more is the biggest, but it's only like 5% more than Russia. Um, but yeah, in the 70s we imported 60% of our oil, and in 73 they actually said we're not gonna let any oil onto a tanker that's bound for the US. There was a total embargo, and prices of all kinds of things skyrocketed. Um, which kind of brings us back to like our thing from before about prices. We'll see if these higher oil prices do um, lead to inflation in the U.S., and if the UAE wants to curry extra favor with the U.S. if they, you know, try and increase production and get it, or yeah.
I wouldn't be surprised. Like, we're in a better position now than back in the 70s, because we just produce way more oil and we're more protected from that. Less supply constrained, or less supply required from other
Mhm.
countries. The UAE has been for a long time trying to get closer to the West, at least in my opinion. Watching their Dubai and Abu Dhabi and such, trying to be tourists destinations and the cultural uh, destinations for Europe and the U.S. and such. And so the UAE leaving OPEC, show weakens OPEC overall. The UAE can do what they want, and overall, that's probably good for the U.S. And so, yeah, we'll see how that all affects the production of oil, and how it affects the geopolitics of it all. I'm sure the UAE was not a big fan of getting bombed by Iran. Um, they definitely got hit by quite a few things.
Yeah. Ultimately, one would think they would build a pipeline through Saudi Arabia to get oil out that doesn't have to go through Hormuz, but
Well, Saudi
um,
Arabia does have a pipeline that goes down to the other side, but it's just they max capacity it.
mhm.
They produce so much oil, even a pipeline that is full constantly is just a minor portion of their total production.
But they don't allow the
Oh,
Gulf
other
states.
countries,
Yeah,
yes.
yeah.
Well, I guess if they're already maxing out their why would they?
Right.
They need to produce more, and I'm sure they are. I'm sure they're constantly building more and more pipelines to try to diversify. They've had problems with Iran, well, for many hundreds of years, probably. But yes.
Mhm.
Do you want me to go into Spirit Airlines as our last topic here?
Yeah, so I'll get started on that one. So Spirit Airlines out of business. Um, they had tried to merge with Frontier, if I recall, and
But with JetBlue.
Jet was it? Okay.
Yes, yes.
So they had tried to do a merger, and I don't know why Frontier was on my mind.
It's another
Anyway,
budget. Frontier and Spirit and JetBlue are all budget, so it makes sense.
right. That was rejected by the Justice Department on antitrust grounds, which doesn't seem to happen very often anymore. And um, then there was some rumor about, or Trump floated the idea of possibly having the government take a stake in the airline. Um, you know, Whatever you think about that brand of economic interventionalism, that didn't happen. And so, yeah, a lot of flights canceled, and some cities will, for a while, for now, have less service, and we'll see if other airlines fill those gaps, or if this is going to lead to a decline in service in some markets.
Yeah. It's 17,000 employees that were out of work and thousands that were stranded when Spirit just literally stopped flying. They said, "Well, we're landing this plane, and then good luck." Um, versus, yeah, the economic interventionism or whatever term you use there with like Trump. He's invested in various companies via the U.S. government with like steel producers and
Intel.
chip makers, Intel, exactly, yeah. But I believe here Trump would have bought Spirit, but the Republican senators and congressmen, at least a portion, a coalition of them, were very against it. At least from my understanding, where they said this is not a national security risk of keeping Spirit. This was they did not want this, and so I think Trump kind of let it go. He just tried to get other people to buy it, buy the company. He tried to get United and Delta, I believe, maybe a few others, and they all passed on it for various economic reasons, I assume. But yeah, the Spirit JetBlue merger, I think it was back in 2024 or 23, somewhere around there, and so that was the Biden administration that had blocked that on antitrust. To me, looking back with hindsight 2020, um, it probably they probably should have let that merger go through to simply keep the companies afloat. Now it's hard to see 2 years in advance and to see where a lot of this bankruptcy could be caused or could be blamed on the higher price of jet fuel, which is somewhat caused by the Trump
Hmm.
administration's war. So, like, I think if Spirit going under is considered a bad thing, and you're looking for someone to blame, I think both administrations had problems, and more so than all that, I'm sure the company executives that made the decisions that they have over the past however many years are probably the most to blame. Usually, like these are very hard businesses to run, especially airfare, and it's very competitive and very expensive and all the other problems. But it's a shame to see competition fall as these companies go bankrupt, especially Spirit. A lot of people have strong opinions about Spirit of since it's a low cost airline that it's not as enjoyable to be on instead of in comparison to like Southwest or Delta or one of the larger airlines. But we do have to commend them after 34 years or have 40 something, however many years they never had any incident, no safety incident, no crashes, no anything. So they were very much, they might be low cost and you have to pay for your luggage and you don't get whatever treats or food on it, but they very much they got you to where you needed to go. And not having a crash, I think, over that many years is impressive and commendable.
Hmm. Airlines, it's tremendous fixed cost. The planes are expensive, but then the fuel costs vary so much. You know, it's sort of like they should have to have a capital requirement reserve or something if you're running an airline. But tremendous businessmen have lost money on trying to run airlines.
Well, Trump, wasn't there Trump Airlines, tremendous
There
businessman there that
was
failed
Trump
out?
Airlines. There was the Pritzker family, I believe, used to own Braniff Airlines,
Mm,
which went under a long time ago. And Howard Hughes, the first or second billionaire in America, had an airline that failed. So,
yeah, these things happen. You mentioned capital requirements. For those that don't know that either, that's reference to like banks have certain levels of capital requirements where
thank you.
so there aren't runs on banks. They need to hold a certain amount of cash. There have been a lot of concerns with like back when there were these bailouts for these companies during COVID. There was a lot of requirements put in place where they couldn't buy back their stocks and such. I don't know what Spirit did or didn't do. I didn't follow that. But there could have been more requirements put on them of like, okay, well, we're giving you this cash, but you need to build and keep this emergency fund. Um,
Hmm.
there might have been argument to be more government regulation, but on the other side is like, some this isn't a uh, there isn't as much harm to the end consumer. Of course, those that got stranded this one time is unfortunate. But it's like if a bank fails, that's really problematic and it falls back on the government versus, these private companies make their own decisions. And if their own decisions are to not have an emergency fund and, they run out of money, yeah, it's their own choice. They went bigger, go big or go home. They tried to put more capital to work to try to grow faster potentially, and it didn't work out. So yeah, something to think about the capital requirements.
Hmm.
I don't see it probably likely to happen, but all right. Let's see if there. I don't think I saw any questions come through on the Q&A. We also skipped over the Federal Reserve holding interest rates steady with the highest levels of distance.
Oh,
That's a really minor one because nothing really happened of the interest rates stay steady. But we will like mention that there were four dissents, which is the highest since 1992. One of the dissents was Stephen Mirren, who is the Trump appointed um, governor who has dissented in every single meeting for rate cuts. And it's very much, he was put there to get Trump rate cuts. And he's one of 12 votes or however many votes that the committee is part of.
well.
And so it doesn't matter how many times he asks for rate cuts until Trump gets more people on, it's understood there will be a dissent every meeting, basically. Even if they
Mhm.
do a rate cut, he'll ask for two rate cuts. Versus the other three dissents were saying it had to do not with the decision, but with the writing, the report that came along with it. And they in the report basically said that the next decision will either be to cut or to do nothing. And those three felt that that should be removed, and it could be the next decision to be to cut, to do nothing, or to raise. So that's basically a fear of inflation. So three of them felt strongly enough that there could be a raise in rates, which is usually negative for the markets. Um, so definitely that was interesting to see.
Yeah, sorry, I skipped right over that one.
They're both
But
Federal Reserve. Yeah.
yeah, I mean, I agree with the dissenters personally, but I don't know. I guess um I'm not in there in the trench with all their data.
Yeah, they have so much data. All
Mhm.
the every 12, all the 12 members, even Stephen Mirren, which we pick on a little bit, they all have more data than we'll have access to.
Mhm.
So ideally, we can trust all of them except Steve Mirren to make good decisions. So it'd be good.
Collectively, it does seem to be doing a good job of maintaining their independence.
Yeah. All right. Well, didn't see any Q&A come through. So thank you everyone for attending this month's market update webinar. A very eventful month, both markets and in the news. feel free to, if you're watching this on YouTube or listening to it as a podcast, feel free to share this with friends or family. Same thing. Also, feel free to check out our new YouTube videos that we mentioned. If any of you need help, feel free to email us directly on our website or at our team email, team@silverstone.financial. Happy to talk. All right. Have a great night.
Good night, everyone.